For us here in Louisiana, the grain harvest is long over and in the bin. Even across most of the U.S., most of it is harvested. Joining us now is TWILA's Neil Melancon with this week's Bottom Line. And Neil, according to the USDA, this grain crop just keeps growing and growing and growing.
Like the Energizer Bunny keeps going and going and going. That's absolutely right. The most recent supply and demand report the USDA came up with an even bigger crop than the already huge one they predicted in October. As you can see, corn estimates were higher than last month and the average trade estimates for yield, production, and most especially carryout. The trade just keeps thinking that the corn crop can't possibly be this big and has continually tried to push that number downwards. The USDA, though, doubled down with this report and is seeing bigger corn numbers coming. For beans, it's much the same thing: higher yield, higher production, and higher carryout, although not quite as dramatic as for corn. The good news with beans is that we're seeing a bump in exports, and we'll have more on that in just a second here. The world carryout situation is also interesting because while we did see the requisite jump in corn stocks, it was reduced for soybeans. Again, that has a lot to do with the export situation, which is different for both commodities, radically different in fact. The bottom line is we do have the crop in the bin, and now we need to look at what's going on in South America and what they're producing, as well as what China is going to take. With South America, we can only look at weather, which has been favorable to a monster harvest thus far down there. We're still 5 months or so from a harvest there, though, so a lot could change. With China, it's more clear. They've cut their feed usage for corn by about 10%, which is lending itself to cuts in corn imports and thus stockpiling, as we saw on the world market. Soybeans, though, are seeing an increased demand into China, which is expected to continue into 2016. And Avery, you know, what's bad for these commodities is good for us consumers as well as livestock producers. Livestock producers, of course, getting a big break on that corn, you know, that feed, and that looks likely to continue, especially as we're on this cusp of that big livestock expansion, you know. And hopefully, you know, a lot of these grain reduction prices we'll start to see at the grocery store maybe mitigate some of those higher prices that we've seen.
Yeah, you mentioned about the expansion in beef cattle. Do you think that these lower grain prices will help bring on more people retaining cattle?
It has, and I think we've seen that thus far. You know, we saw that big jump down from, you know, 2013, 2014 into this year, that not jump, but downward trend. And not coincidentally, I think we've seen an expansion into livestock, you know, herd. They were already planning to do some of that anyway, just because we had gotten so low, but now prices have started to drop in the livestock area, and with corn prices going even further, that means, you know, it's more economical for livestock producers to retain cattle for breeding.
And with fuel prices low, that's good for all of our farmers out there.
For all of us.
All right, thank you very much, Neil Melancon.